nothing goes from here to the moon without a 50% drawdown along the way. It'll go up, down 50%, and then back up for the really big, sort of hyperbolic price move. We said you have to expect that's true of all commodities. Why not get the gold now, which I do recommend. The other thing that people don't understand, Robert, is just this is sixth grade math. You don't need calculus for this. Each $1,000 gain is $1,000 gain. If you have an ounce of gold, it goes up $1,000 an ounce. You just made $1,000. That's real money. But because you're working off a higher base, each $1,000 gain is a smaller percentage than the one before.
Very, very sick inside the economy and in our monetary system to be driving gold that high. So question number one, Jim, why is the price of gold rising? What's going on in the economy?
Right. It's sort of a two-part answer, Robert. One is exactly as you put it. Why is gold going up? What's going on? What's the basis for predicting $15,000 an ounce by 2025, which I do. But then also, well, what does it really mean? Is that you said it's not a good thing, and I agree. It's not a good thing for the economy. It's not a good thing for most Americans. If you have gold, you can pat yourself on the back and say, yeah, I made a lot of money on gold, but that might be in a world where you're losing a lot of money on other things, and you need to be alert to the overall economic picture. So let's take this one at a time. The gold $15,000 an ounce, it comes out of three different analyses that actually don't correlate to each other. The first great bull market was 1971 to 1980, and gold went up over 2,000%, from $35 an ounce to $800 an ounce in January 1980. Then there was like a long, drawn out, almost 20-year bear market from 1980 to 1999, and gold dropped down to around 250. So it went from the 800 level down to 250. The second great bull market was from 1999 to 2011. August 2011, gold went from $250 an ounce to $1,900 an ounce. That was an almost 700% gain. Then the second bear market, August 2011 to December 2015. The third bull market, I can give you the exact date, December 16th, 2015. Gold hit $1,050 an ounce. That was the bottom of the second bear market I described, a pretty steep fall from the 1900 level. But you could tell it was the bottom. You say, well, how do you know that? You do it one way, you get a number, you do it another way, you get a number, you do it a third way, you get a number. It was interesting that they all came out, not exactly to the penny, but very close to that $15,000 number. So the first way to do it is just, it's a little bit of technical analysis, not overly technical. We're in the third great bull market in gold in history. When I say in history, you're like, well, gee, history is a long time. How come this is only the third bull market? Well, the answer is for almost all of history up until 1971, gold was money. So you didn't have bull markets or bear markets. It was just gold. And that was the money. And you thought about it by weight. You said, well, I'll give you an ounce of gold for this property, or I'll give you, a quarter ounce for, some food or groceries or whatever. So you thought about gold by weight. It was money, constant store value. So it's really only since 1971, when Nixon suspended redemption of dollars for gold by our foreign trading partners, that gold just went its own way, detached from the dollar. So the dollar would do what it was going to do, and gold had its own market and still does. I had a conversation with our friend Jim Rickards, one of the greatest traders in general, and certainly one of the greatest commodity traders of all time. And this was before that market bottom, when it was still going down. And I said, Jim, we were down in the Dominican Republic. I said, Jim, you buying gold? And he said, no. He said, I've got gold. I'm keeping the gold I have. I'm not buying more right now because it hasn't hit bottom. And then he gave me one of the best pieces of advice I've ever had. He said, Jim, nothing goes from here to the moon without a 50% drawdown along the way. It'll get there, but it'll go up, down 50%, and then back up for the really big, sort of hyperbolic price move. We said, you have to expect that's true of all commodities. Taking that advice, I then, looked at the charts. Well, starting 1900, if you say, okay, it was 250, it was 1999. 1900 was August 2011. So there was that gain of $1,650 an ounce of gain. Take half of that, that's 825. So take 1,900 minus 825, and guess where you come out? You come out right at 1075. And so when I saw 1050, I said, bingo, there's the 50% drawdown. It's exactly what Jim Rogers said would happen. That's the bottom. And it's up about 50% from there. Now, it's been a little bit higher than that, but it's up about 50% from there. And by the way, don't wait. If you agree with that analysis, and there's more to back it up, don't wait until 2025. People say, oh, okay, well, it's going to be $15,000 an ounce. I'll go out and get it in 2024, I'll catch the wave. No, it's a long way between here and 1,500. I mean, you got to get to 3,000, 4,000, 5,000, 6,000, 7,000, etc. You got a long way to go to 15,000. So why not get the gold now, which I do recommend, and then enjoy all those profits. Don't wait to the end, because it could happen, but it could be like a little spike at the end. If the first bull market was up 2,000%, and the second bull market was up 700%, if you just take the average of those two, you don't have to pick the higher of the two, you don't have to go crazy or say it'll be bigger than ever. It could be, but you don't have to do that. If you just take the average of those two, you would come up with a number around 1,400% gain from the 1050. Well, that would put you at almost $15,000 an ounce. So in other words, and the same time period, the first bull market was 8 years, 9 years. The second bull market was 12 years. Just take the average, you get 10 and a half years. So from December 2015, just using the averages, not anything crazy, 10 and a half years up, 1,500%, bingo, puts you at $15,000 an ounce in 2025. The other thing that people don't understand, Robert, is just, this is sixth grade math. You don't need calculus for this. Each $1,000 gain is $1,000 gain. If you have an ounce of gold and it goes up $1,000 an ounce, you just made $1,000. That's real money. But because you're working off a higher base, each $1,000 gain is a smaller percentage than the one before. So when you move from $2,000 to $3,000 an ounce, that's a 50% gain. But when you move from 14,000 to 15,000, it's only a 7% gain. So that's why these bull markets get a lot of the gains toward the end, because 7%, that's a week. And then you might have to wait a while to get to 3,000, but if you're at 14, you're not going to wait long to get to 15. 7% could be a 1 week rally. So in other words, those $1,000 increments are smaller percentages and easier to achieve the further along you go. One more reason to get the gold now. Almost all of history up until 1971, gold was money. That gold just went its own way, detached from the dollar. If you agree with that analysis, and there's more to back it up, don't wait until 2025.